Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. This week's topic is how to avoid overbilling and underbilling issues. Uh, Big problem for contractors across the board. So this is the type of thing that if you can really dial it in and get a little bit more, a little closer, a little more accurate on your billing, you really can save yourself some of the heartache and the pain that goes along with, a number of the other issues that you're going to run in your construction business. So we're going to just talk about different ways to avoid overbilling and underbilling. You really want to have accurate billing for a number of reasons, but the biggest is it's crucial for cash flow. It really speaks to the profitability on your projects. And at the end of the day, it also is a trust issue with your clients. They see an accurate bill come through, it's something simple, but you continue to build trust with them. And then again, potentially more long-term relationships with them, or again, people that they may in fact refer out on your behalf. So let's talk a little bit about what exactly overbilling and underbilling are. So what's overbilling? It simply is that you're billing for more work than you've actually completed. So you tend to see that on the front end of a lot of projects. Typically, there'll be a front load because there will be a need to acquire some materials. Where that runs into the challenge again is if you bill it all up front, there isn't much left on the back end when you still have expenses you've incurred. So again, creates a little bit of a challenge there. It's great. Again, it brings cash flow in on the short term, right? It brings it in at advance. But as I just mentioned, on the backside or on the long term, on the end of that project, you don't have as much cash to collect. And therefore, you're still incurring expenses to finish off that project. So now you've made the kind of the cash coming in and going out a little bit wonky and a little bit more challenging now on the backside for you to potentially pay for the things that you need to. And so it can, again, create cash flow problems. You can also have issues where you've got disputes with a client, especially when you get to the close of a project or the tail end of a project. If you have any disputes about some of the final billing, again, if you have a challenge collecting some of that final billing on a project because you're not in agreement, you've had a lot of the cash that's front ended. And again, you're still incurred expenses on the backside that you're trying to pay for. Again, creates more cash flow problems. And again, the opposite, what's underbilling? Underbilling simply means that you've not billed for the work that you've completed. So you've done a bunch of work and you haven't billed because you're the kind of the opposite side. Oh, well, I'll get the cash on the backside. Again, just like overbilling, you can create cash shortages. Sometimes the shortages will be on the front side of a project when, for example, it is maybe heavy on materials. And so you're buying a bunch of materials and you have less cash. It can create, especially when you're trying to project where you are with some of your projects, where you are from a cash flow position. Again, it becomes a little bit more challenging because now you're projecting more cash going out the door versus what's coming in. You've had the work, you've incurred, you have a team that's working on it. Maybe your sub's working on it. So again, you're trying to pay all these people, but you haven't had any cash come in or you haven't billed a client. Typically with the underbilling, again, you're going to get relatively inaccurate financial reporting. It's going to be comparable. I mean, it's the similarity with the overbilling. It's going to be comparable to that. It's just going to be in the other direction. And again, just like with the overbilling, where you could potentially have a dispute with your client, if you've underbilled them, again, there's an expectation, well, they haven't been billed up to a certain point, and now you're going to try and grab everything on the backside. Again, it can create distrust with your clients as well. It's not just a cash flow problem, a financial statement problem. Again, when you're trying to build trust and find that next project and be that go-to person, if you aren't considered trustworthy, it becomes quite challenging for you to find that next project or do that next project, no matter how tight you are on your cash flow and projecting on your cash flow as well as your projects. So some of the causes of overbilling and underbilling are going to be just poor tracking in your projects. Um, you do not have you have a complete lack of real-time job costing. So, you aren't actually tracking the expenses associated with your projects on a real-time basis, on a daily basis, on a weekly basis. Maybe you're just tracking on a monthly, or you're tracking at the end of a project. You wouldn't actually know that you're over or under billed because you haven't done any kind of reconciliation to the end of the project. um you're just providing inaccurate progress billing. You're just creating progress billing. Oh, we're 10% done, we're 20% done, but you don't actually know how far along in the project based on your costs. So again, that could in fact create overbillings and underbillings. um, if you are not communicating internally, if your project team is not communicating with your accounting and finance people, then there can in fact be overbillings and underbillings that are done. If finance doesn't know that you've done work up to a certain point and XYZ can in fact be billed, then again it doesn't get billed. So there needs to be not only communication amongst your project team, but real-time communication with your accounting team to ensure that the expenses are getting into the correct project, so in fact where you are, but also that communication of where you are progress wise. If you are billing monthly, what was incurred over the prior month, so it in fact can properly get billed out. And again, you're matching up those expenses real time instead of again overbilling or underbilling. And honestly, if you are overbilling and underbilling and you're not tracking your projects properly, you could in fact have delays in submitting any kind of change orders. Change orders are a great way for the costs on a project to become unwieldy and out of control. More dollars out the door for actual work that's been done, but potentially hasn't been collected. And so again, you've incurred more expenses, but because you've not properly tracked your billing up to this point, you don't know that you've in fact not billed the client, or vice versa, you're not where you are in terms of the billing throughout the project. So you want to make sure that you are submitting your change orders. Again, this is your communication with your finance department. The project team knows that there's a change order, but if finance doesn't, again, client can't get billed and attempt to get collection from that client if there isn't that chronic or that communication between the two functions to ensure all of those things are actually happening. So some best practices to avoid any kind of overbilling or underbilling issues. You want to make sure that you implement an accurate job costing system. There's tons of products out there, depending on the type of business that you have. From being a residential developer to being a trade contractor, there are going to be a number of different software products out there. What I will say is find the right one that works for the type of business that you have, and make sure you're tracking your labor in there, tracking your materials, tracking your expenses real time against that project to ensure that you are in fact on budget with that project, and also communicating that back to your finance team so that they can get out there and get those billed in a timely manner. So again, you're not having those large ebbs and flows in cash. You know where you are on a project, and the project is being properly billed out at the same time. Again, you always want to use some type of progress billing, depend on the industry, depending what type of business you have. Many of the contractors that we work with typically work on that monthly basis. So by the close of the month, they've aggregated all their expenses and they're billing out the first of the month for the prior month. Again, you want to use that progress billing, a standard billing, so that you can in fact get paid in a timely fashion for the expenses that you're incurred. Again, try to flatten the cash as much as possible so that you don't have so much ebbs and flows in your cash flow, which again, if you have, shortage of cash or too much cash, it reflects an inaccurate picture of what's going on in your business at the time. You're going to want to monitor, we call them WIP reports. So it's going to be your work in progress reports. Again, that's where you are in the project. That's your job costing for the project. What percentage completion are you at? What percentage completion are you at in terms of various line items? You want to regularly review the actuals to what you've budgeted. What you've budgeted on a project. What have you actually billed out on that project? Have you billed out everything you've incurred, right? You want to catch those discrepancies early in the project. You don't want to catch it when you get to that last bill and now suddenly, oh, we missed a whole bunch of things and now we're trying to get them all at once on the backside. So again, you want to monitor those WIP reports on a monthly basis at the least to ensure that you have billed out as much as you should, or if you've overbilled, right, kind of course correcting a little bit so that you can kind of flatten that out a little bit. You want to automate your billing process, whatever you are using. We're using QuickBooks and project management systems with clients. A lot of the project management systems, you can actually invoice right out of those systems now, which is great. It allows the real-time tracking of revenues in the project so that you can actually see what you've invoiced out, what you've collected in that project management system, so that from our perspective, it is the Bible for the projects, right? Your project management system is where you go to understand what's going on with your actual individual projects. So utilizing whatever automations you can in the project management system, and then ultimately it feeds into some type of accounting system. Again, we tend to use QuickBooks Online with a lot of our clients. It's not the only one. It just happens to be the one that we use a lot. So that now you've taken all of those projects and you've rolled them all up into that one big financial picture in that accounting system, and you can see the business as a whole. But it's all automated. The collection is automated. The reminders are automated. It's great to set all of those kind of automatic things up to ensure that you're getting paid. You're invoicing out in a timely fashion, and then you're getting paid in a timely fashion. You want to improve communication between your teams. Again, this is good, solid communication between your project team and your finance team. Because if finance doesn't know that there's something changed in the project, they don't know to bill out. If finance doesn't know that expenses are coming, they can't do any kind of cash flow projections. There needs to be that constant communication between the finance team and that project team to keep on track with the financial tracking of those projects, all the costs, dollars coming in, dollars going out, to ensure there aren't any cash flow shortages throughout the project, or again, everything has been invoiced out, because no one wants to see you do a bunch of work and not actually get paid on that work, or get paid on the backside because you didn't keep track of it. So again, constant communication, weekly, monthly communication with the finance team to ensure that all of the appropriate billings are being done. Track your change orders and track them properly, right? Again, that goes back to what we just talked about, improving communication. If finance doesn't know that there are change orders on projects, they don't know that there need to be additional change orders that need to get invoiced out. So again, it's that constant communication, but you always want to document that, right? You're documenting your change orders in your job costing system so that, again, when you're communicating back to your finance, you can in fact get those items billed out. The changes can be made promptly in your job cost system. The costs can be added to various budget line items. Finance now knows that they need to invoice on those things, and so on and so forth. So again, it's really about using the automation tools, communication between the project teams and your finance team to ensure that everybody knows what's going on in these projects, so that not only expenses can get incurred properly, paid for in a timely manner, but also you get paid for your work in a timely manner. So some common mistakes that we tend to see with clients with issues with overbilling and underbilling. A lot of times there's just some guesswork, like finger to the wind, and I think we're here on a project when we don't actually know the costs associated with a project. So again, speaks to utilizing and relying upon your project management system and having all of your team working through that project management system to know exactly where you are in the projects, instead of guessing where you are or guessing what you've spent on a project to date. You actually know. Common mistake, not reviewing the financial information. We might be using this job costing system, but nobody actually goes in there and looks to see where we are. So it's important to see that as well. Are you, on target on a budget on a line item? Are you over budget, under budget? Again, where are you in the aggregate on the project? Those are the types of things that you don't want to wait to the close of a project to look at. You should be looking at on a regular basis. but you want to be looking at the financial impact of a project to determine whether or not you have any challenge, cash flow challenges coming up. Again, underbillings, overbillings, additional expenses coming up, change orders, things like that. One of the things we see from a finance perspective when it comes to common mistakes in overbilling and underbilling, it's you ignore the discrepancies that you see in your WIP reports. Like we see the reports with it's missing information. We haven't captured all of the information. We haven't captured a change order. So when we're looking at a project from an overall financial standpoint, again, there are just missing items in there that haven't been captured. And that will, in fact, give you an inaccurate picture of where a project may be at that moment in time. If you have any questions, we're always here for you. Please drop them in the chat. We'll get back to you and answer them as quickly as we can. As always, I look forward to seeing you here every Friday. Please follow us here on Facebook. Subscribe to our YouTube channel. We are at the Construction CPA on all of those. I look forward to seeing you here every Friday. Have a great weekend, and we'll see you next week.